Hi everyone, this is the lesson 2 of week 3 of our accounting task, just to start adding a few more pieces to the puzzle. So hopefully this will clear up some of the issues that were even raised in questions the other day, which were excellent questions, by the way. So just to continue cementing that accounting terminology, we looked at revenue. Revenue is the actual or expected cash inflow that is caused by the sale of good or service, and expenses are the actual or expected cash outflows that occur in the course of earning revenue. So we covered those the other day. Remember these two terms too. They take a while to cement. Once you get used to them, they're not too bad. So we're looking at accounts payable, so which is owed money by the business for buying goods or services on credit. So we've purchased something from suppliers, have received the goods, but haven't paid them yet. So a supplier that has provided goods or services to our business on credit to be paid at a later day, for example, 30 days down the track. Accounts receivable, customers who owe the business money as a result of buying goods on credit. So we make a sale to a customer, they take the goods away, they haven't paid us yet. That is an accounts receivable. And when we receive it, we cancel out the debt and put the money in our bank. So it's customers who have purchased goods and services from you on credit and still owe the money to the business. Just going back over the balance sheet as well, just as part of getting used to accounting terminology and the accounting equation. So the balance sheet is a statement that shows the assets and liabilities of a business at a point in time, so which is normally could be the end of the month or the end of the year. And we can use the accounting equation to help write up the balance sheet, which asset equals liabilities plus owner's equity. So the way that's structured is we've got assets on the left-hand side of the balance sheet, we've got liabilities on the right-hand side of the balance sheet, and owner's equity on the right-hand side of the balance sheet. So if you've got assets, take away the liabilities, it leaves you with owner's equity. So you can change that equation around to, and I'll show that on the next slide. And here we go with the balance sheet. We've got our terminology or our equation that we've done before, assets equals liabilities plus owner's equity. So it's just like any other maths equation. If you want to find out how much owner's equity is, or how much owner's equity we have as a business, just subtract L from both sides. So we've got A minus L equals L minus L plus OE. So L minus L equals 0. They cancel each other out. So the final equation is assets minus liabilities equals owner's equity. So that's just a swap around of the terms and how it works. So I was asked the other day, what happens if someone from the business takes money out of the business? Doesn't that then put the balance sheet out of balance? And the answer is no. We haven't introduced the term yet, but I will now. Accounting is all about double entry. So when a transaction takes place, it affects two entries or two items. So in that way, the person taking money out of the business, it will affect two items being the bank account and the owner's equity account. But we'll have a look at an example on the next slide. So accounting is all about the double entry accounting. That way the balance sheet always stays balanced. So here we have an example of a balance sheet that we looked at earlier on in one of the presentations. We've got the balance sheet there that is balanced. We've got total assets of 34,000. We've got total equities on the right-hand side of 34,000. That's just a mistake there. It shouldn't say total liabilities. It should be called total equities. And imagine if the owner decides to pay $1,000 off the assets payable. How is the balance sheet affected? And here's the solution. It's a double entry. So by paying $1,000 off, the bank goes down because you would have paid the $1,000 out of your bank account, and the amount owing to your suppliers, accounts payable, also goes down. So the result here is that the cash at bank has gone down to $2,000. The accounts payable has gone down to $6,000, and we've got total assets after the transaction of $33,000 and total equities of $33,000. So the balance sheet still balances as a result of double entry, two accounts being affected by the one transaction. Okay, let's get on to the exercises for today and what you'll be looking at. Part of what you'll be looking at today are the source documents. So you would have in your Commerce folder received a few source documents which you need to look at. Here are two of them, just as an example. We've got on the left-hand side, the one on the left-hand side is headed Gill's Garden Gurus and Landscaping and Maintenance, and it's called an invoice. This is a receipt or an invoice from Gill's Garden Guru. So this is going to one of his customers. So this invoice or receipt results in income coming into his business as either a cash receipt. This one is a cash receipt because it says down the bottom receipt number 10001. But it could also be set up as an invoice. This one's a little bit, it's got headed as an invoice as well, so it could be used as two different things. So an invoice would also show the amount to be paid, the date it's to be paid, etc., etc. But either way, it's either going to be coming into the cash receipts journal or the credit sales journal. So that's the two, because so it's coming from Gill's Garden Gurus paying his or invoicing his customers. The second one on the other side is from a business called Woodman's Auto Supplies. So this is a business who have invoiced Gill's Gurus or have received money from Gill's Gurus. This is actually a receipt for a payment that Gill's Gurus has made to Woodman's Auto Supplies for auto work or whatever it is. It doesn't really say what it is, and it says it's been paid in full, and it's got the amount of what the invoice is. So the person who's sending the invoice will normally have a heading on their particular invoice or document that's going out, and that's how you can tell that it's an invoice that's being sent out or a receipt that's being sent out from the particular customer. One of the questions you'll have to look at in your worksheet today is trying to work out how Gill's Garden Guru can improve his invoice or his receipt. So what you need to do is just go and do a search on the internet, have a look at some cash receipts or cash payments and some images associated with it, and have a look at what Gill has left off his invoices, if anything, and how they can be improved. So that's one of your tasks. I'll be looking to see how you can improve the receipts that Gill has been issuing for his business. Right, for the lesson today, for lesson 2 of week 3, you've got to answer the questions in task 3 and 4 in Analyse the Excel spread journals on Garden Guru's Excel spreadsheet. Explore the spreadsheet, keep familiar with what the spreadsheet looks like, and then in task 3 you're asked to suggest ways to improve Gill's own business receipts. So research the internet for images, searching business receipts, etc., and look at the different images. What is Gill missing? Make sure you're looking for Australian invoices because our business system may be a little bit different to overseas. But just to clarify then, you've got to answer the questions in task 3 and 4. There's some that are on the source documents that we just spoke about, the receipts and payments, and then there's also one on credit sales. So complete those parts and then continue to familiarise yourself with the Excel spreadsheet, which we'll be moving more into in the next lesson. All the best. Any questions, come and see me or Mrs. Clement in Google Chat during your class. All the best. Bye for now.